Hi, today we'll be talking about 5 myths of the crypto bull market. Why this bull market that we are in for several months already will be completely different from what the so-called experts, the crypto influencers, are telling you. What are the 5 myths and how this bull market will look like? You will find out after the break. Crypto bull market. We are for several months already in a great bull market in crypto. And many influencers, most so-called experts present you with charts from the 2017 bull market explaining to you how this bull market will look like and how it will develop, drawing conclusions from the last bull market of 2017. And my hypothesis is that almost everything will be completely different in this bull market in comparison with the bull market of 2017. And I will give you 5 myths that these experts, these influencers promulgate, repeat, and they want you to believe that just will not happen this way. Let's start. The first myth that they promulgate, that they repeat, is that this bubble will be smaller than the bubble of 2017. And their explanation goes like this. In the top of 2011, we had a Bitcoin price of $30. In the top of the bubble in 2013, we had a Bitcoin price of $1,100. So if you compute that, you will have a multiplication between the bubbles of 37 times. So the price of Bitcoin went up 37 times from the bubble 2011 to the bubble 2013. Then we had a bubble 2013, 2017. It went up to $19,600, which is times 18. And these experts tell you then, you see the bubbles, the difference between the tops, the peaks of the bubbles, they get smaller and smaller. So this bubble will be smaller than the bubble 2017 in the sense that the Bitcoin price won't grow as much between the last bubble and this bubble. So they say, we have a halving maybe of the price of the height of the bubble each time. So the first bubble was 37 times, the next bubble to 18 times, and then we have 9 times. So if you compute from $19,600 to 9 times, it's roughly $176,000. That's what these experts will tell you just looking at the chart of the Bitcoin. But I'm telling you, and this is not an investment advice, I'm not a financial advisor, you take your own risk. I'm telling you my opinion. I'm not convincing you to invest. You shouldn't invest if you don't know what you do. You should never invest too much and so on. But I'm telling you, this bubble may be much higher than the last bubbles. Why? Because there is so much money waiting at the sidelines to get into the crypto market. All these institutional investors are just waiting to get into the Bitcoin market, into the crypto market, to overcome these former obstacles to be able to get exposure to this very attractive investment market. So they may propel the price of Bitcoin many times more, because it is just enormous amount of money that will potentially be invested in Bitcoin. And if you watch my video from 3 years ago, how big the bubble could get, in that video I was comparing the crypto bubble to the dot-com bubble. If we get dimensions or FOMO, institutional FOMO, like we did with dot-com bubble, we could get up to $84 trillion market cap in crypto. I'm dissecting it in that video that I will connect here in the description. Watch that video and you will see why is it 84 billion, and it should be even more today because they printed so much money just recently. So 3 years ago it was 84 billion. Today, probably in today's money, it would be maybe 150 billion. But taking even 84 billion, if we take a very conservative Bitcoin dominance of 1/3 of the entire market cap, which will not be the case, because you will see the next myths that I will discuss here. But let's take the very conservative 33% Bitcoin domination, 1/3 of the entire market cap, crypto market cap in Bitcoin. Then we come to a Bitcoin market cap of 28 trillion, not billion, to 28 trillion, which translates into a Bitcoin price of $1.5 million. So, as I said, if we have a FOMO, institutional FOMO, we could get in this bubble already over 1 million to valuations, to Bitcoin prices of over $1 million. This is possible. So by no means we will have much smaller bubble than we had in 2017. It will be, in my opinion, even a much bigger bubble than we had before. So the comparison or the explanation that these influencers bring to you, the bubbles are getting smaller and smaller in Bitcoin, this will not be the case. This doesn't hold. The second myth that I encounter very often from the so-called experts, from the influencers on YouTube, on other media, is that we will have a lot of price corrections in Bitcoin of 30 to 40%, because they will show you a chart from 2017, 2016, 2017, and they will tell you in the bull run we had 9 corrections of 30% and more, up to 42% in the bull run, before we reached the all-time high in December 2017, and then the bubble crashed. But my take is we will not see such big corrections in Bitcoin in this bull market. We will not see corrections of 30, 35, 40%. I think we will see corrections up to maybe 20, maximum 25% along the bull run. Why? Because there is so much money just waiting to get into the market. The institutional money, the investment funds, they want to buy so much Bitcoin, but they don't do it on the exchanges. They go through OTC, and these institutions, these companies that trade Bitcoin with them, they just wait for the right moment to buy a lot of Bitcoin from the market. They just wait for every dip, and there is no way these dips can go any deeper than 20-25%. And I would even go as far as to say that as soon as we see a 35% correction, we have reached the peak of the bubble already. If we see a 35% correction, we will be in the bear market already. That's my rough prediction. That's the risky prediction that I want to tell you. So the third myth that we hear from the influencers, from the so-called experts, is that the valleys, the dips after the bubbles, they will get smaller and smaller, meaning the percentage how far Bitcoin drops after each bubble gets smaller and smaller. And they will tell you that 2011 Bitcoin went from $30 at the top to $2 at the bottom. It is 93% correction. Then we had 2013. They will tell you Bitcoin went down from $1,100 in 2013 to only $172. So it went down 85%. And then we had this bubble of 2017 when Bitcoin reached $19,600 and then went down to $3,200 at the bottom. And it is 84%. So you can see these drops after the bubble, they were getting smaller. And these influencers will tell you, okay, in this bubble, Bitcoin will probably drop down maybe around 80% after reaching the bubble. Maybe it will drop only 70%. So much less than in the previous bubbles. They tell you Bitcoin is getting less and less volatility and so on. But I'm telling you, it may not be the case. It may drop as much as 90%, maybe even 95% after reaching the bubble. Why? Because we'll have exuberant prices. We'll have institutional FOMO and crazy prices in the bubble. And after the bubble, there will be a lot of money waiting that will need to be liquidated in the crypto market, and the price of Bitcoin will drop enormously. Because at the end of the bubble, if we get this FOMO like we had in the dot-com bubble, we will have institutional speculators on the market with tons of money from forex markets, from stock markets that will just operate on crypto market. There will be institutional speculation in huge amounts, insider knowledge, trading on insider knowledge, and so on and so on. So we will experience a very steep race to the top of the bubble, and also an extremely steep drop, an extremely massive drop after Bitcoin will reach the top. So that's my prediction. The fourth myth that we hear from the so-called expert is that the altcoins will grow in price faster than Bitcoin does. I am telling you some altcoins. There will be several altcoins, maybe 10, maybe 20 altcoins, maybe 1, maybe 2% of all altcoins will outperform Bitcoin. But on average, all our altcoins will probably not outperform Bitcoin in the bull market. And I'm telling here about Bitcoin and Ethereum as non-altcoins. I don't count Ethereum to the altcoins. If we take out Ethereum and Bitcoin, all the other coins will not outperform Bitcoin and Ethereum together. Right now, Bitcoin and Ethereum together, they have more or less 80% of the market cap. The dominance of Bitcoin and Ethereum together is 80% right now. And the experts will tell you at the end of the bubble, we'll have 30-40% domination of Bitcoin and Ethereum together. But my guess, my estimation is we will not drop significantly below 80%. We may even increase that domination of Bitcoin and Ethereum. Maybe we'll drop to 70%, but really it won't be significant. Probably will increase this domination. And why is it the case? Because the institutional investors will not be able to speculate on most of the altcoins due to AML, KYC reasons, regulatory conditions and so on and so on, they will be able to speculate mostly on Bitcoin and to invest in Ethereum. And there will be maybe a handful of instruments to invest in other altcoins, and it won't be very popular. And the amount of money needed to increase the market cap, the domination of altcoins in comparison with Bitcoin and Ethereum would need to be comparable with the institutional money that's being invested into Bitcoin. And this is just not the case, and it won't happen. My guess is retail investors will not play a major role in this bull market. Of course, there will be many of them that will speculate, many people will speculate with Bitcoin, Ethereum, altcoins, but the price of these assets will not be much affected by their speculation. They will play a minor role in the price estimation of these assets. And to tell you how much money there is being invested in the crypto world, it's enough to look at the Grayscale investment fund. Before 2019, they got maybe $500 million invested in crypto, inflow in the investment fund. Then in 2019, there was more or less 600 million investment. So in 2019, the inflow of money was more than in 6 years prior, from 2013 to 2018, because they started in 2013. Then we got an explosion of investment in 2020, and it was 3.3 billion. So in the first 6 years, 2013, 14, 15, 16, 17, 18, in the first 6 years, they got maybe $500 million. Then in the year 2019, they got 600 million. Altogether, they got maybe around 1 billion. And then in just 1 year, in 2020, they got 3.3 billion. And they say in the last quarter, it was 3 times as much as the average of the first 3 quarters in the fund. So they had half of these 3.3 billion just in the last quarter. Then they published this article that in December 2020 they bought up 3 times the production of Bitcoin, meaning this one institution bought 3 times more Bitcoin than the miners were able to produce in that month. And this is speeding up, and this is just one institution, and there are many institutions. They are publicly traded companies putting their treasury in Bitcoin. They are funds investing in Bitcoin. They are wealthy individuals, family offices investing in Bitcoin. But this only one fund invested or bought 3 times the production of Bitcoin. So you can imagine how this drives the price of Bitcoin. But this is not everything. So in the year 2019, they raised 600 million, right? In 2020, 3.3 billion. But then they published on Twitter just one day, January 15, they raised 700 million from the market. So they raised more in one day of 2021 than they did in the entire year 2019, or more than in the 6 first years of their existence. So the inflow of new money into this industry is humongous. It's unbelievable. And it's growing and growing. So in the full quarter of 2020, they raised 1.5 billion, but 50% of that they raised in just one day in January 15. And this is like every day around these numbers today. And if you compute that down, you will realize that it is 20 times more than the production of Bitcoin. 20 times more that is bought up by just one investor, one fund. And there are many funds like this. There are many investors. It's just unbelievable how big the push of institutional money there is and will be in this industry. Okay, we come to the fifth myth of Bitcoin, and this is everybody is waiting for ETF, Bitcoin ETF, saying this will allow institutional investors to get in Bitcoin. This will be traded on financial markets, and this will drive the Bitcoin price even higher. And my guess is now, actually, when we come to Bitcoin ETF, it will mark the end of the bull market. This will be probably one of the triggers that will end the bull market, and it's actually negative for Bitcoin industry, for Bitcoin price. Why is it this way? Because right now the price pressure from the investors translates directly into Bitcoin. There are almost no derivative products, almost no derivatives for Bitcoin. This is completely different from gold. In gold, we have 100 times as much paper gold than the physical gold, and that's why investors they invest in this paper gold. So investment pressure, the buy pressure, doesn't translate into the gold price directly. It translates maybe in 1%, below that 1%, and that's the reason why the gold price has been being suppressed for years already, and it's not growing. And the same could happen to Bitcoin if there are a lot of derivatives. Right now we don't have much derivatives. There are some contracts and so on, but they play a minor role right now, and it is not like we had 10 times, 100 times as much money in these contracts than we have in Bitcoin. But if we start to see ETFs, especially those that are not backed by Bitcoin, then we will see this dilution of the price dilution, so to say, of Bitcoin, and we'll start to see the trend that the buy pressure will not translate one-to-one into the Bitcoin price. And that's why we shouldn't applaud a Bitcoin ETF. We should actually defend Bitcoin from these derivative products, because in the long term they may become a danger for the mission of Bitcoin and also for the price of Bitcoin. So these are the 5 myths that I wanted to share with you today. I invite you to comment below this video. What are your opinions about these myths? What is your perspective? How do you find my explanation? The numbers, maybe you have other numbers, other data. I invite you to comment. Give me a thumb up if you like this video, thumb down if you didn't. Share this video with your loved ones, with your friends. One day they will thank you for that. I talk here a lot about crypto. I talk about money. I talk about economy. I talk about how to do great impossible things in your life and business, how the best entrepreneurs in the world think and act, how the self-made billionaires of our times think and act. So if you like this video, you will certainly like my other videos. I invite you to watch them. That's it for today. Wish you a fantastic day. Let's do something extraordinary today.